How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report as of March 20th, 2018, and here is the snapshot of the currencies and the US dollar and the positions that the institutions are holding right here. So this report is going to be a little bit interesting because every 3 months the futures contracts come to an end, and then new futures contracts begin. And so during this phase, what typically happens is the institutions need to get out of one contract and then get into another contract, the new contract. So when this does happen, what we will typically see is some discrepancies in the data collected from the CFTC, because the institutions can be in the middle of transitioning from one contract to another, and they may not have their full exposure at the time that the data is recorded. So we're going to see some discrepancies in the data, and this is the reasoning behind it. Okay, now let's take a look at gold and see what we see. So this week we had a really strong bullish reaction here off of that weekly 20 EMA. Okay, but what do we see with the data? We know that back in January the institutions were holding a very aggressive position, or many aggressive positions here, up to 305,000, right? But since January, which is these highs, what's happening? We see that they've been reducing longs from 305, 298, 273, 251, and then up a little bit, and then boom, all the way down to 223,000. So from going from 305,000 positions down to 223,000, that's a significant drop. At the same time, short positions went from 91,000 to 75,000. So, we can see that short positions are cooled off, and long positions are just entering into a cooled off territory by one sell, which is not a lot. And we can see that with this reduction in short positions, we have long exposure jumping from 77% to 75%. So basically the coloration of the cells is blue. So the sentiment right now is neutral. So basically, taking a look at the coloration of the cells, our indication is we should not be thinking that there is a bullish or bearish sentiment going on at this point. So what do I see happening here? If I was to just look at the technicals, what do I see happening in this area here? So, alright, so we got the weekly bearish engulf here, and then a bullish engulf, and now we're getting another bullish engulf, which is a pretty good sign that price may just head higher. Alright, so we got this right like this on the weekly chart. We got that uptrend, and now we got weekly 20 EMA supporting. So there is a possibility that we see price continue to move to the upside, because we have this extension upwards, some consolidation, and we could see a continuation to the upside. That's definitely possible, but, and I'm still saying but, I'm very, very skeptical of what's happening here. Okay, why am I skeptical? Because for 1, 2, 3, 4, 5, 6, 7, 8 weeks in a row, the institutions were working on reducing their long positions. Only for 1 week they're going to push price upwards. I doubt that. I have not, in all my years studying the COT reports and studying price action, have ever seen institutions maneuver through a position and taking weeks to do so, only for in 1 week change the direction of price. Okay, all of this tells me here that they are profit taking at highs so that they can get in lower at a cheaper price. That's what all of this indicates to me. And that's a lot of weeks data. Okay? That's a lot of weeks data right there. So to just jump on the bandwagon after one weekly bullish engulf and think, oh, you know, they're going to take price to the upside right now, I think would be foolish. At least through my experience, it would be foolish. So I'm not going to just believe that the institutions are going to take price higher right now. I'm not going to think that. Now, I posted on Twitter that there was a really nice area of daily supply here, which could be used as an area to drop price because the area was just very quickly tested. It could be an area that the institutions were looking to push price upwards to lure retail traders into buying gold, and then once up there they close off any remaining long positions that they want, and then possibly add in short. I mean, if we take a look here, you'll see that they started to add short right in this consolidation candle right here. They bumped up shorts from 61 to 66 to 75 3 weeks in a row, and then this big move. So is that what's in play right now? It's very possible. You know, you also have to consider what the US dollar is doing, right? The US dollar's hitting demand, and we see the signs that the institutions are taking profits on shorts. So if the US dollar goes up, what's most likely going to happen with gold? Now, you also have to consider the economic news that's been coming out, right? There's this big war between United States and China that they're throwing out in the media, a trade war, and you know, headlines like this like to get are used to get retail traders excited and involved in the market. So, you know, when people are worried about the US dollar, what do? They sell the US dollar, they buy gold. So is this a reaction from that? You know, all it would take for the institutions to lure retail traders into a trap like this is to put out the news, freak people out, and then fill in some buy orders. You know, they fill in some demand, they cause some nice bullish price action on the charts, and then retail traders are like, see, I knew it, boom, let's do it. And then everybody starts to buy. And as everybody starts to buy, they don't have to fill in their orders anymore because now the momentum is starting to pick up and price starts to rally up. And then it gets to those areas that we know through multiple weeks of hardcore evidence is an area where the institutions are and have been taking profits on long positions. Okay? So this is what we know for a fact. I'm not making any judgments here based on 1 week's price action or what the media has been spewing out. I'm looking at facts, I'm looking at hardcore data, and I'm taking into consideration years of experience watching the markets and reading the COT reports and looking at what the positions of the institutions. So I think we need to be very careful with this situation because instead of just jumping on the bandwagon, we have to wait patiently. The only time I'd be interested in going long here is if I start to see the institutions going long and I see these highs being broken and I see institutional demand being formed on the charts. When I see that, I'll be in long. But right now the only story I'm seeing is the institutions are taking profits up here, and a story in the news is causing price to rally up. So I gotta fill in the blanks, and the blanks are telling me they're gonna continue to take profits on long positions and price is gonna reverse and drop. That's what the story tells me, and until I see a different story, I'm going to stick with that one. Alright, so let's take a look at oil. What do we see with oil? So we see some decent indications that the institutions are going to take oil higher. Okay? So let's take a look at the data. So last week, during this consolidation here, we saw that the institutions had decreased longs from 814 to 799. But then this next consolidation candle, what did they do? They added to their long positions from 799,000 to 823,000. So was that in preparation for this large move to the upside? Possibly. What do we also see? We see that they're closing off their shorts from 130,000 to 119,000. So here is where it gets tricky, because exposure is 87%. I mean, that's massive. Okay, that's really high up there. 87%, and net positions is a positive 703,000. That's a huge jump. From positive 668,000 to positive 703,000, that is a massive jump higher. So market dynamics say that, you know, we could get a bigger move to the upside originating from here. That is possible, and it may be in the works right now. I was expecting for price to drop a little bit lower down here. I thought this would have been a better area to get in long, but it looks like the institutions want to do something different. Now, I'm not 100% sure that we're going to see a continuation of a move to the upside, because there's just not enough data to really solidify this idea that price is going to go higher. Now, I've seen some indications on the daily chart that the institutions may be interested in taking price higher, but I'm going to wait and see how the next couple days play out, because looking at the daily chart, something significant happened, and I don't want to go into too much detail in this video, but something significant happened, and but right after that significant thing played out, price action was really sloppy. So it's a pure indication of a fake out, just to lure people into buy position, a long position. So I need to see what's going to happen over the next 2 weeks, or the next 2 days, because I want to see if the institutions are playing games with us or not. Like I said, I want to go long oil, but, you know, not when it's the wrong time. At the end of the day, we are sitting within a weekly supply area, and going long within a weekly supply area is typically not a good idea. Market dynamics is allowing us to enter into a long position, but like I said, I need to watch for the next couple days to see how price plays out, because I have a very strong feeling that there may be some shenanigans in play right now. Longer term, with the CAD getting weaker, it's going to be interesting to see what's going to happen here, because I do believe that the CAD is going to get weaker in the longer term. But the Canadian dollar is very much tied in with oil, and so if the weaker CAD comes into play, how are things going to come into play here? You know, are we going to just get a little bit of this and then move downwards? That's possible. So we'll have to wait and see, but we're getting ahead of ourselves right now. Let's get back to what we see here. So I'm going to let the next couple of days play out so I can see what's happening with price action. And if price does what I think it's going to do, then I'm going to continue to wait. If price plays out in a different manner and the institutional trade signal presents itself with 100% certainty, then I'm going to be taking a long trade on oil. Okay, let's go on to the US dollar. What do we see here? We see the institutions closed off some longs from 22,000 to 20,000, and they close off a little bit of their shorts, but not too much, about 600 contracts long. And so we're still sitting down here. We see this bearish move on the markets, and again, I think that was just retail traders freaking out and selling the US dollar right where the institutions want them to. We got 50-50 exposure for the institutions, 50% geared to the long side, 50% geared to the short side. Sentiment is still bearish. I don't like this trend line here, but I do believe that we're going to see a move to the upside from here. Okay, so just waiting patiently for that move to take place. Aussie. We see a big increase in long positions and a slight decrease in short positions. So I've been interested in getting long this one for quite some time, right? been talking about this for a while, since price was up here. I said a drop in price down to this area would be something that I would be interested in seeing for me to want to get into a long position. Now I have long orders already set in place, waiting for price to drop down and then accumulate a position and then up. So I got positions ready, and I'm liking this. I'm liking this big increase in long positions from 38 to 53. That's a massive drop. That pretty much takes long exposure from 49% to 60%. That's a big drop, and making the sentiment somewhat bullish, right? Increase here, net positions negative 779 to a positive 17,925. So this is good. This is a good sign. This could be the beginning sign of the institution starting to accumulate a long position, because they're not going to really start to accumulate a position down here, right? If they're going to look to accumulate a long position and get numbers back up to like the 100,000 mark, we're at 53. They need to add 50,000 contracts. If they start adding 50,000 contracts here, it's going to be harder to be able to manage price in such a way that they can continue to get it at such a good price. So we're more likely to see them starting to add longs here, and as price declines, they add shorts to get a better price and better average on their longs, and then start to accumulate the rest of their long position for a move to the upside. So good and early indication that there is the possibility of a larger long position starting to accumulate. US dollar CAD, what do we see here? We see that the institutions increase long exposure, and they also increase shorts by quite a significant amount. And that brings short exposure down 1 point from 60 to 59%. We were expecting this reaction to the downside from the monthly descending trend line. The only thing is that there was this beautiful weekly area supply, and we fell short of hitting that area. I was under the impression that they were going to hit this area supply and then drop price, but they reacted beforehand, and I understand why, because if you look at other markets, those markets are already making their moves, so makes complete sense. Stronger, and then we see what? Stronger oil, right? So we're in between this, and we're in between this, and within a higher time frame, sorry, right here, higher time frame area of demand. So boom, 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 breakout to the upside is what I'm expecting. So there's going to be a lot of choppiness. You know, there's a very good chance that we see a move down here to this weekly area of demand, and then a bounce up, and that's where the choppiness is gonna continue from, right in between these areas. So it's not a good idea to get into any trades on this pair, because we're just going to see a lot of up and down. And right now we're reacting from a weekly area, weekly bullish engulf, so that can cause some reaction to the upside, which we already started to see. So I'm not trading this one. Sentiment is blue, somewhat blue, bluish reddish, meaning bearish but neutral. And so with this move back and forth, I'm not looking to take any trades because there's nothing of any high probability setting up here. US dollar Swiss franc, so we're reacting from that weekly area of supply that I was expecting a move from, starting to work to the downside. I had an institutional trade signal in the 4-hour chart that fell short of being hit. I said I wasn't going to take it because market dynamics were suggesting that something else was in play. And we might start seeing, this might be the early signs of what I think is about to start happening, right? We got an increase in longs from 23 to 25,000. Shorts remaining at around 17,500. Coloration of the cells still neutral. So don't take any trades on this one. What I think is going to happen is reaction to the downside and a bigger move upwards. I think a bigger move upwards is in the making here. So I don't really want to go in short right now because I think it's going to be short-lived, right? Bottom line, coloration of the cells are blue, so stay neutral and don't trade this pair right now. Euro US dollar, what do we see? Okay, so longs get closed off from 239,000 to 219,000, which is a good sign. And shorts are decreasing from 93,000 to 86,000. So The other day, on Friday, I was examining the COT reports. And every time I examine the COT reports and the data, and I'm looking at the charts, my goal is always to try to understand exactly why the institutions are doing what they're doing with their positions as price is reaching certain key areas on the chart. And so it just dawned on me something really, really huge. Something really, really huge. Something that never came to me before. And it's funny how things come to you. You have to, it's like you have to put in so many thousands of hours into studying something until certain things are revealed to you. There's no way, shape or form, you can ever just jump forward to this knowledge. It has to be earned through countless hours of study, examination, and analysis. And so something hit me on Friday, and it was so exciting to me because, you know, this is my life's work. This is what I devote so many hours of my time to, is studying the COT reports, studying the institutions, studying price action, studying supply and demand, technical analysis, market dynamics, to have a full understanding of the markets and what's happening in the markets at all times. So it just dawned on me something really, really massive. And so what I'm going to start doing now that I have this information in my head is I took notes. I wrote down in my journal so that I can make sure that I didn't forget what I was learning. And what I'm going to be doing over the next few months, even longer probably, is I'm going to examine other charts and examine COT data and take a look at similar scenarios to what is being experienced right now in the euro. And I'm going to look at many other charts to see if I can see a correlation between what's happened in the past and what's happening right now, and see if what I have spotted is something of relevance. I believe it is. It makes complete sense. I spent all Friday night and Saturday contemplating and thinking about it and playing out the scenarios and analyzing it in my own head. And to me, it makes complete sense. So I'll get into that on another video. Most likely that video will be for subscribers in the future. But I think it's going to be game-changing when I do finish doing my research. Okay, so anyways, let's get back onto this. What do we see? Institutions closing off longs and closing off shorts. So long exposure still sets at 72%, and we saw this candle here consolidating as they were closing off longs. So key thing to remember here is that here is January like 21st, I believe it was, around here, 262,000. And right now we have 219,000. 117,000 shorts, 86,000 shorts. So they're both reducing longs and shorts, okay? But take a look. Net positions, positive 144,000, positive 132,000. What I think is happening here is massive profit taking on longs for a move to the downside. Now, how much of a move to the downside? That is what the big question is. I think a few things could be in play right now, and you know, I don't want to go into too much detail with what I think is going to happen, but you know, I am completely convinced that what the institutions are doing now is just manipulating markets to keep price high so that they can close off their long positions. And when they're done offloading the amount of long positions that they want to offload, this is going to drop hard, like really hard. I think it's going to take out this area and probably even this area, and high probability even this area. All right, that's what I think is what's in play right now. And if what I'm suspecting by looking at the COT data is in play, if what I'm suspecting is true, this is what's going to happen. So I'm going to be watching this really closely. I'm in short positions. I'm seeing indications on the charts that the institutions are more concerned with holding supply than they are with holding demand, which is a pure indication to me that price is going to drop. And like I said, I'm already situated short, but I'm seriously going to consider adding to my positions and adding to my positions in a more aggressive fashion. Okay, so move to the downside is what I'm expecting, and gonna let the market settle because there was some news last week that got people excited. So I'm gonna let that excitement calm down, and once it does, I know the institutions are going to come in to make their moves and show their hands. And when they start showing me their hands, then I'll have more confidence in what exactly is in play. But I'm about 95% sure that what I think is happening is happening. So I just might start adding more aggressively to my short position this week. Okay, so let's take a look at the pound. What do we see here? We see an increase in the last couple of weeks from 61,000 to 71,000. What do we see here? A rally in price. So that's normal, right? They're adding longs, yes, because they're pushing price back up here. Boom, 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 like that. And what do we see? Increase in long exposure to 60%. Okay, so January 23rd, 99,000. Now we're at 71, even with that increase. Still 30,000 contracts long being closed. That's significant. And positive 33,000 too, even with the huge increase here. A positive 23,000. Bottom line, long exposure is being reduced. Massively aggressive, becoming more neutral, and a little bit aggressive to get price up here. Double top. A lot of traders are calling it a double top. You can call it whatever you want. Bigger move to the downside is what I'm expecting here. Long exposure is 60%. Bullish sentiment is still holding. But like I said, if you take a look at everything else, the institutions have been taking all of January, February, and March to position themselves in a certain way, to offload certain positions. And so I'm going to be sticking with that. Looking at the US dollar, looking at the euro, we see clear indication of what's going on. So that tells us the bigger picture. That tells us of, what is in play here. So the profit-taking theme still resides, and I'm waiting for a bigger move to the downside like this. So just being patient. It's taking its time, but like I mentioned before on numerous videos, when we hit higher time frame areas of supply or demand, things always take time to play out. So you just gotta learn to be patient. Okay, let's go to the next one. We see the US dollar, Japanese yen. I'm just about to get triggered. I don't think I was triggered last week. I'll have to double check my account. But I don't think we were triggered. Here's an institutional trade signal to go long. So I'm got no beef with getting into this position and waiting months for this position to play out, because it's going to take time. And as I'm holding it, I'm going to be earning money, especially after they increased the interest rate on the US dollar. So I'm going to be earning even more money just for holding this position long, which to me is always a good thing. I'll open up a position just to knowing that eventually it's going to go in my direction. And if it takes a long time, that's great. As long as I'm making money from it, hey, it's all good, right? So here's one of the major discrepancies in the data. As I was mentioning, contracts ended March 18, so institutions have to get out of those contracts and get into the new contracts. And so during this transition phase, you're going to see data not being a complete representation of what's going on. So yeah, 69,000, yeah, they didn't drop positions from 123,000 to 69,000. This data is most likely correct. Shorts increasing from 44 to 47 as price was consolidating right before the drop, so makes complete sense, right? But this number is probably either bigger or smaller. It's hard to say. It could be them adding in preparation for a big move up, We won't know until next week's data. Next week's data will be a lot more accurate, but you know what I'm feeling on this one. Consolidation, accumulation, move to the upside. Not much else to say, considering the data is not accurate. So let's go on to the last one, Kiwi dollar. This one's a mess. Nothing good and tradable here. Wrong information here. Longs drop while price drops. We could see a move to the downside, which is what I think is going to happen. But the charts are a mess, so there's nothing really clear to trade off of here. All right. So I'm not taking any trades on this one. So in terms of data coming out this week, there's nothing of real interest for me. So I think what's going to be in play is all those retail traders that got excited and made moves in the markets last week based on news. I think that that volatility is going to die down this week, and I think the institutions are going to show their hands even more. All right, so that's what I'm going to be waiting for. I'm going to be waiting for the retail traders to realize that they were wrong in the decisions that they made last week, and then I'm going to let the institutions make their move. And when they make their move, it's going to be even further confirmation to me that what they are up to is exactly what the COT report and the technicals are suggesting. Okay, so I hope you guys will use this video to help make your trading decisions easier for you this week. And remember to be patient, be objective, and let the market prove to you that it's doing something before you jump on board too early. All right, guys, hope you enjoyed it, and until next time, have yourself a great trading week, and make sure you watch Billions Season 3 tonight. Take it easy, guys.